So today we're continuing my topic on talking about some stock market basics, and in this video we're going to talk about a bear market, or what is a bear market. Now, as I mentioned in the last video, I am currently away in New York City on my trip, and if you guys are looking to have updates on what's going on with that, make sure you follow me on Snapchat. I will post my username up on the screen here so you guys can follow me, because I'm going to be posting a lot of videos and photos from that exciting event. But let's get to the topic of this video and talk more about a bear market. So in the last video we talked about how a bull market is a time when stock prices are rising. So a bear market is going to be a time when stock prices are falling. So during a bear market, most investors are selling. People are very afraid to be invested in stocks. They're seeing stock prices fall, and at that point there is an emotional trigger, and that is called loss aversion. So people are worried about losing more money than they have already lost. So as a result, many people are trying to cut their losses. They say, yeah, I'm down 10 or 15%, but what if stocks continue to fall? What if I go down 20, 25%? So many people end up selling during a bear market. And that is one of the worst things you can do. We're not going to get into that in this video because this is going to be just a basic overview of what a bear market is. But if you guys want to learn more about what you should actually do during a bear market, that is one of the sections of my stock market mastery course. That is a 17-part course that I created that is over 12 hours in length. So if you guys want to learn more about that and what to do in a bear market, the link for that is in the description below. So during a bear market, people are selling their shares left and right. There's a massive supply of stock going to the market, and as a result, the price per share falls to a point where many great stocks and many great companies become undervalued. So what happens is there's a massive sell-off. And do remember that a bear market is going to be much shorter than a bull market. And that is largely due to the fact that the emotion of fear, which is what fuels a bear market, is much stronger than the emotion of greed. So when people are fearful, they're going to be selling a lot quicker than they were buying. So you're going to see a bear market is going to be a much more volatile and a much shorter time frame for the markets. So while a bull market happens during strong economic times and prosperous economic times, you're going to see a bear market during an economic contraction when there is less economic activity. One of the biggest signs of a bear market is unemployment. So if you're seeing unemployment on the rise, that is a bad sign for the markets. Usually that means that companies are cutting back and they're having layoffs because they're not seeing the profits. They're not making money right now, so they're having to cut employees, and you're going to see unemployment rising as a result. Or the fact that many companies just aren't hiring because they can't afford to bring on any new employees. So how do you identify a bear market? Well, you're usually looking for a market correction of about 20%. So if you were to see a 20% dip in a particular index, maybe the Dow Jones Industrial Average, or the S&P 500, or the NASDAQ Composite, if you see a 20% dip over a couple of month period, that is a good sign that we are seeing a correction and transitioning from a bull market into a bear market. Now, we talked about investor sentiment in the last video, and during a bear market, the investor sentiment is fearful. People are afraid. They're selling and they're getting rid of their shares. And they don't care that they're taking a loss. They just want to get rid of them. They're afraid to be holding stock at this point in time. Now, during a bear market, you're going to see very little IPO activity because companies don't want to go public when nobody is buying stocks, when stock prices are at record lows. Because do remember that an initial public offering is a way for a company to raise capital. And if they're going to offer their shares to the public and they're not going to get a fair price for those shares, they're not going to bother doing that. So you're going to see significantly less IPO activity during a bear market. Now, the good news is a bear market, as we said, is much shorter in duration than a bull market, and historically every single bear market has given way to a very prosperous bull market. So the best thing that you guys can do as investors is use a bear market as a time to go hunting for value. This is, again, something I talk about in my stock market mastery course of how to unearth value, or as I say, go hunting for gold during a bear market. But many people get afraid and they are fearful when it comes to a bear market, but you have to understand that it's just a normal market correction and a normal occurrence. But I'm hoping that now you guys have a better understanding of what a bear market is and what a bull market is from the previous video, and you would be able to identify these and understand what the market is doing right now, whether we are in a bull market or a bear market. Anyways guys, that's all I got for this video. If you enjoyed it, please drop a like. If you are new to my channel, please consider subscribing to be notified of future uploads. If you guys have any thoughts, feedback, or questions for me, make sure you leave them in the comments section below. And as always, I hope you have a great rest of your day, and I thank you for watching this video.